Recession.
Recession.
A recession.
A recession.
A recession.
With all the talk of a possible recession, it immediately makes your mind go back to 2008. The financial crisis where so many people lost their jobs. Lots of folks were kicked out of their homes. And your retirement account dipped so low, you thought you would be working way past your 100th birthday. So we all want to know, is 2022 headed for a repeat of 2008? Are we on a crash course for another big recession? I'm Ben Briscoe. From now until 6, we're going to dig into the health of our economy, starting with getting on the same page about what officially is a recession. The Federal Reserve says a recession is a significant decline in economic activity spread across the economy, lasting more than a few months. Normally visible in real gross domestic product, real income, employment, industrial protection, and wholesale retail sales. That's a whole lot of fancy pants economic words, isn't it? Think of it this way. When a recession happens, the economy screeches to a halt for the span of several months. People lose jobs, demand plummets, and wages could get cut. Economists say that is not where we are right now, but it could happen.
Many consumers are buying fewer goods.
Dana Peterson is chief economist at the conference board that analyzes trends in manufacturing, housing, the stock market, even the movies, and issued the leading economic indicators report Friday.
Big takeaway is that, look, there's trouble ahead. That's something that we shouldn't ignore. But right now, things are more or less okay. Most people are working. The unemployment rate, which is something lots of people do pay attention to, is very low. It's 3.6%. And not only are most people in the United States working, many people are seeing wages rise.
A steady paycheck's helping consumers to keep consuming, even as they pay high inflation-driven prices.
Well, the leading economic indicators is telling us, no, we're not in a recession right now. But the reason why some people are saying that is because it may feel like one. Inflation is super high, and a lot of that's being caused by factors that are arguably outside of the United States.
Russia's war in the Ukraine is a key factor worldwide, and one President Biden called out when he hosted the major economics forum from the White House.
And with Russia's war driving up inflation worldwide, threatening vulnerable countries with severe food shortages, we have to work together to mitigate the immediate fallout of this crisis. In the United States, I'm using every lever available to me to bring down prices for the American people.
I don't think a recession is inevitable.
That was the top talking point for Biden administration officials over the weekend.
Not only is a recession not inevitable, but I think that a lot of people are underestimating those strengths and the resilience of the American economy.
But former Clinton Treasury Secretary Larry Summers says he doubts those economic strengths will be enough.
The dominant probability would be that by the end of next year, we would be seeing a recession in the American economy.
That's a feeling shared by 70% of economists, according to a recent poll. So we're not in a recession. It's not inevitable. It's also not impossible. What should you do now to prepare just in case? Well, experts say it is hard right now with high prices, but try to put money away. It's always good to have an emergency fund and pay down high interest debts. You may have less disposable income if a recession happens, so you want as little debt as possible. The next big question online, should you pull your money out of the bank? Experts urge you not to panic. Consumer Reports says a savings account is actually one of the safest places to keep your money. Federal insurance covers up to $250,000 per holder. That means married couples with a joint account can have protection up to $500,000. If you got more than that in your savings, well, that's impressive. You should talk to a financial advisor. They'll tell you the best ways to protect your money. Next, what would a recession mean for prices? Will they go up or will they go down? Experts say historically prices drop in a recession. 2008 resulted in more than a 60% drop in gas prices, for example. That sounds great, economists say it's not, because it also means people are losing their jobs. When prices are slashed to get people buying, companies have to find ways to cut costs. Others might see an unexpected pay cut. So many people also want to know, should we cash out our 401k before a recession? Financial advisors say now is the best time to maximize your 401k contributions, not decrease them. Since the market is doing poorly, it's a chance to buy low. There's a pretty simple rule to follow too. Remember, the younger you are, you can afford to take more risk in volatile stocks. The older you are, your portfolio has to be more conservative with guaranteed fixed income.
Switching some of your equity positions to fixed income, which isn't going to give you a lot of return, but it's going to give you a little ballast to make your portfolio a little safer.
You're not investing for the next 6 months. You're investing for decades in the future. You know, that little devil on your shoulder says, don't just sit there, do something. I turn it around and I say, don't do something, just sit there.
Next up, should you sell your house before or after a recession? Well, it's no secret prices have been crazy. Demand has gotten really high as we moved out of the pandemic, and that drove prices through the roof. Don't just take it from us. Christina Hargrove is a real estate agent. She's also trying to buy a house. She said it is keeping her up at night.
Trying to find a house with the mortgage prices going up and gas prices and everything else, it's just been a bit of a nightmare, honestly.
Mortgage rates also just hit a 30-year high. Between higher prices and higher interest, the average home buyer pays $500 more per month now than they would last year, or $189,000 more over a 30-year loan.
It creates a significant affordability challenge. Not only do you have very high rates of house price growth, you also have now, a pretty rapid increase in mortgage interest rates.
The housing market has two big issues for home buyers: high prices and low supply. Some people have called it a housing bubble, and they worry that this thing, it's going to eventually burst. The good news, we talked with several economists. They all say there was no housing bubble to begin with.
For a housing bubble to exist, we will have to argue that people are rather believing some kind of story about the price, why the price of the house should be that high, rather than ignoring the economic fundamentals that would cause the price of a house to be so high. And in this case, I think the economic fundamentals justify the increase in prices that we've seen.
He says home buying rules changed after the 2008 recession and market collapse. That makes a housing bubble less likely to form again. That doesn't mean we won't see a big drop in home prices. If the economy does take a tumble, we can expect demand for houses to dry up fast. That leads to a drop in prices. Realtor.com says if you're thinking about selling a home, do it now. You can sell high and try to buy low when the prices drop. Just remember, there is no guarantee you'll be able to find an affordable option right now because of tight supply. Look, a recession might be around the corner, but it's not necessarily going to be there. The best thing we can do is don't panic. Stay calm.